Income tax 2020. Adjustments to income, half of self-employment tax. Come in, relax with income tax. Adjustments to income, half of self-employment tax. When thinking about the income tax equation, we're basically going to be on the second line here, remembering that we can cut this income tax equation into two halves. The first half being, in essence, a modified income statement. The second half then being calculation of the tax and application of credits and payments to get down to the bottom line, that being the tax refund or the amount due. We're going to be up top in basically the income statement side of things. And in prior presentations, in future or prior sections, we talked about the income, what would be included, what would not be included. Now we're going to be talking about basically deductions or adjustments to income, you can call them. Again, this line has kind of changed titles from time to time. But basically, we're talking about deductions. I would call them above the line deductions to differentiate them between those and the below the line, which will typically be either the standard deduction or itemized deduction. Again, the name up top has changed. We discussed that in prior presentations. I think the easiest thing to refer to it is as above the line deduction, even though that might not be as descriptive to people that are not familiar with the tax code, but for people that have worked with it for a while, they'll probably use that term often. You could say Schedule 1 deduction. You could say deductions for adjusted gross income or adjustments to income. So we're on this line item. So these are items that we do not have to be picking and choosing between whether or not we're going to itemize or take the standard deduction. So that's going to be a benefit up here. If we qualify for one of these deductions, then we'll typically be able to qualify for it, and we won't have to go over a certain threshold in order to get access to the deduction. So we're going to be talking here about the self-employment tax, and that's a little bit confusing because we're going to have to add another component. That's going to be self-employment income. But in essence, it's going to be down here, same kind of spot on the Form 1040. We're concentrating on the deduction, which is going to come from Schedule 1 to this section on 10A and then fall down to 10C here. We'll see this in more detail in a future presentation when we actually do this in tax software. So I know it's a little small right here, but we will get to it in a future presentation. Then we have the Schedule 1. This is part 2 of the Schedule 1, where we see the deductible part of the self-employment tax, and we would attach the Schedule SE. Now we'll get into the Schedule SE self-employment tax in a future presentation. We just basically want to give an overview now as to why this would be deducted here, because we're on these above the line type of deductions. And then when we dive deeper into the Schedule C type of business, we'll see all the different impacts that the Schedule C has. But just to get an idea of why this would show up here, if you have a company that has self-employment income, the most common type of self-employment income would be they have their own business that they are conducting, and we have to report on a Schedule C, attaching a Schedule C for the business income. So that would look something like this. We'll get back to this line item as we go through this little detour because it's all connected. So we're going to say, okay, they got a Schedule C business. Here's the Schedule C, basically an income statement on the Schedule C for the business income. We're going to record income and expenses here on this schedule and then pull that whole amount, that net income in essence, to the first page of the 1040. In this case, all we have is that $100,000 we put up top for the income. So the income statement, Schedule C, includes income and expenses. That gives us basically the net income that's going to flow through to the first page of the 1040 and then be included in the income on the 1040. The net amount here will be included in income on the 1040, and then we will pay the federal income tax on it. Now, the complication with the Schedule C, however, is that the IRS is saying, hey, if you have a Schedule C business, you didn't pay us any like payroll taxes. We didn't get any Social Security and Medicare taxes as you would have had to pay, because if it's a C corporation, we make the C corporation pay or take out of the employee wages Social Security and Medicare, and we also make them pay Social Security and Medicare. And even though you don't have any employees here, this is the IRS talking, I'm paraphrasing the IRS, this is my interpretation of the IRS here. They're going to say, even though you don't have any employees, you're basically an employee of the business, right? You are an employee of the business and you're the owner of the business, and you should then be paying into the Social Security and Medicare system, just like you would if you were a W-2 employee or if you were an employer for like a C corporation paying employees. So they're going to say that we want to charge you Social Security and Medicare in addition to the income tax, and that's what basically the self-employment tax is. So self-employment is basically the IRS charging the business owner as if they were pretty much the employer and the employee for Medicare and Social Security. So we'll talk about that in more detail, but what that does then, of course, is when we do the Form 1040, we have to add not only the federal income tax, but now we're going to be paying tax on Social Security and Medicare. Whereas we wouldn't do that if we're a W-2 employee. We would simply report the fact that we already paid Social Security and Medicare when our employer took it out of our payroll. They took it out for us when we paid it. But if you're a Schedule C business, we haven't already paid it, except in the form of basically estimated tax payments, because this is where we're going to calculate it at this point in time. So that means we got to calculate the Social Security and Medicare on this. And so that will basically flow over to, let's say, the 1040. This is page 2 of the 1040. And you can see in the 1040, we have the actual tax calculation here. And then we have the added tax that's going to be calculated. This is other taxes, including self-employment tax. So this is a whole nother tax that was imposed here based on the self-employment tax. Now, the self-employment tax, if you think about it, it's if you were to take your self-employment that was paid out of your wages, if you had W-2 wages and they charged you self-employment, it'd be like usually 6.2%. So in other words, 6.2%, and then Medicare is usually 1.45%, and then the employer pays 6.2% and 1.5%. So in other words, in essence, if we take a look at the calculation, and we'll go into this in more detail in the future, we got 14,130 divided by 100,000 that we had in the self-employment income on the Schedule C. That's 14.13%, which is about, if we took the employee portion of Social Security that gets taken out of your W-2 wages for Social Security, 0.062, and then plus the amount that usually gets taken out for the Medicare, 0.0145, and then we double it for the employer portion times 2, then we're at about 0.153. So you're kind of close there. We'll talk more about the specifics of the calculation once we get to the Schedule C type of business in general. But you can see basically that's what's happening here. They're basically applying out Social Security and Medicare both on the employee and employer side, tacking it on to the tax return on the Form 1040. So you have your federal income tax and now adding in your Social Security and Medicare, in other words, self-employment tax. So then if you take that amount, that 14,130, the next problem that happens here is you're trying to say, okay, so I get what you're doing. I'm paraphrasing here the story here. So we're going to say what you're doing is you're trying to make it as if we're an employee of the business so that we're mirroring, in essence, what would happen for a C corporation who was paying employees, where you'd have the employee and the employer paying the Social Security and Medicare. But, in a C corporation, they get to also take a deduction for the payroll taxes. Like their employer portion of the payroll taxes, they get to deduct that there. And, if you just do this calculation, we're not getting the benefit of the deduction of the employer portion of the payroll taxes, which is generally 1/2 of the Social Security and Medicare. So we can't put that deduction on the Schedule C because we'd end up with a circle reference. If you use Excel, you'd end up with like a circle reference type of formula. So we have to put it somewhere else. So that means that they're going to give us the deduction of 1/2 of the self-employment tax, but we can't put it on the Schedule C. So we're going to say, all right, well then this 14130 divided by 2, which is like the employer portion, we're going to give you that on the Schedule 1, Part 2, the adjustments to income. So that's where this comes from. So if you have a Schedule C, you'll see this line item kind of pop up over here. It'll typically calculate on its own if you're using software, as we'll see in a future presentation. And you'll have this very disturbing line item here, which will be self-employment tax that will be added. And that's going to be a big factor that you got to be taken into consideration when you are dealing with or planning for self-employment income. So then, of course, this line item would then flow forward to this line item here. Now, obviously, with a Schedule C, there's a lot of other things that could be impacted and involved. We're trying to just focus in on one thing at a time, focusing here on the adjustments to income for the self-employment tax. We'll take a look at it in a little bit more detail with the tax software next time, which will probably be able to tie it together a little bit more easily as we jump around to the different forms in the tax software.